Hey traders, triangle is a very classic price action pattern and it is frequently applied as the confirmation for opening and trading position. In this video I will show you a very nice example on the triangle trading. We will discuss how we properly identify this pattern, we will discuss how we properly identify stop loss, and how we properly select the target for trading this pattern. Alright traders, I am on a CAD-yen pair and here you can see that the market is trading in a very strong and sharp bullish trend. You can see that for a very long period of time the market here is growing like crazy, and what we know about the bullish rallies, they can last very long. And you know the market is never too high, it is never too overbought, and you know we are very bullish biased right here. And once we see a strong bullish market, once we see the bullish continuation like that, it is very important for us to identify what is the current goal for buyers. And to do that, we should analyze the higher time frame. On a daily chart, looking left at structure, we just don't see any structure at all. So we will switch to a weekly chart, and there we will try to identify the historical key levels. Hey traders, if you want to learn pattern trading, if you want to see how I apply my trading strategy live, analyzing different financial markets, how do I spot the patterns and how do I trade them, you will definitely enjoy my premium educational group. Check the link in the description below. It is vasilytrader.com/private group, or text me in one of the social networks. I will give you more details. Let's continue. Alright, I'm on a weekly chart, and here first of all let's underline the current price level so we could get where the market is trading right now. You can see that looking left at structure so far we don't have any key level right here. You can see that the first structure, not the major one by the way, but just the strong structure is right here. It is based on this low high right here, and it can be the goal for buyers for now. As we know, key levels, the structure levels, serve as the magnet for the market participants, and most of the time major reversals start only from this key levels. So you can see that for now there's a very nice potential here for further bullish continuation on Swiss yen. And the next structure that we can identify in the weekly is that key level right here, again this low high. So you can see that from current prices we can catch very nice bullish rally to higher structure levels. We will keep them right now while we will analyze the daily time frame again, because they serve right now is the levels for potential targets for our trades. So we are on a daily time frame, and on a daily time frame I zoomed in the chart so that we could analyze just the recent price action. And here our task is to simply follow the recent swings, recent impulses, and try to get what is happening with the market. As you can see with these lines, I'm just trying to match the highs and lows of the market so that we could identify some pattern, yes. And first important thing for us to get is that right here the market found some structural resistance. From that structure the market nicely retraced, and then we saw one more test of that structure and the price retraced again, setting the high low. Then what else we can identify right here? Analyzing the high lows, analyzing the recent high lows, we can identify this rising trend line. And you can see that so far we have the horizontal structural resistance right here. Yes, quite strong one based on this two equal highs, and at the same time we have high lows. So right here we spotted with you the ascending triangle formation. And what we know about the ascending triangle formation is that it is the classic trend following pattern being formed in a bullish trend. Yes, and why it is a trend following pattern? Because even though the price sets here the equal highs, we set also the high lows, and after each and every retracement from that resistance our impulses become shorter and shorter. It just tells us that the selling volumes here are very weak. After each and every retracement, less and less sellers are willing to sell, and for that reason the retracement legs become shorter. For that reason this is a very classic bullish bias pattern, but the trigger here that we are looking for is the breakout of the resistance of the triangle. And now let's discuss how we confirm the breakout and how we will treat this pattern. So first of all, how we will confirm the breakout right here. First thing for us is to properly underline the resistance of the triangle. As you can see here, our resistance is based on the wicks of this equal highs and on their bodies, so that we have quite narrow area of resistance. And what we are looking for right here, we are looking for the daily candle close above that structural resistance. Yes, we need the daily candle to close above. We don't need the wick above, but we need the candle close. Once we see the daily candle close above that resistance, then we can look for the entries. How can we identify the entry right here? And remember, with your rules, you must be very strict. And I prefer to base my entry on the highest candle close in the underlying resistance. My highest candle close is right here, based on that structure high right here. So once I see the daily candle close above the underlying resistance, then I will set my buy limit order on a retest of that level. Yes, based on the candle closes of that high. My stop loss right here will lie below the last high level of the pattern. Yes, something like that. So you can see that I give sufficient space between the level of the last high level and my actual stop. Yes, you know, most of the time greedy traders just set it like that. Yes, they just give like 2-3 pips and they say that it is enough. It is not enough. Your stop, your safe stop, should have the sufficient space between the level of the high level and the stop loss itself. And our first goal right here will be our weekly structure that we identified. So you can see that here we can get 1.6 risk to reward for the initial target. You can see that it is not that good, but remember that we are trading in a very strong bullish trend, and chances will be high that the market will keep rallying to higher structure levels. So here I would close like 30% of the position. Yes, it is the trend following setup, so we can look for the test of higher structure levels. So, you know, then goes our second goal. Our second goal will be the next weekly structure, and you can see that here risk to reward is much better. And the fact is that the market can go like that for a very long period of time. And if you apply the trailing stop, for example, you know, you can catch a very big win trade. The only thing that you need to properly make money trading the trend following setups is you must be extremely patient, because sometimes the market starts consolidation, sometimes the market retraces, sometimes we see the pullbacks, and while we see them, it is very hard psychologically to keep holding the position. Yes, so if only you are patient enough, if you follow the rules, and if only you get the safe entry, you can catch these big winners. And here is the perfect example on how we apply Vasily triangles for trading trend following setups. Alright traders, I hope that with this example you understand better how we trade the triangle. I hope you get right now how we select the stop placement and how do we select the target placement and the entry, by the way. If you want to learn pattern trading, don't forget to check my premium educational group, the link in the description below. Like this video, subscribe to my YouTube channel, and I will see you on the weekend.